now I'm going to go back to you asked me a question earlier. Why should everybody have whole life? Because no other financial tool in the world will grow with you the way that whole life will grow. Like it literally helps you differently at every stage of your life. Think about it this way. If you agree, once again, I'm not going to tell you what you should or shouldn't do. I'm going to ask people watching here a couple questions. If you agree that you should have an emergency fund, which I think that's just good adulting. Is that fair to say? We need to have some liquid
Very
accessible
good.
cash, right? So let's just agree that we need to have an emergency fund. And let's just say it's 6 months. I would say bare minimum, the question now is, where do you keep that emergency fund? And for the sake of argument, let's just call it a whole life policy, right? Because we all know what we know that that's the case. And if you want to challenge, we both got videos that will show you why that's the case. Okay, if we know that, let's go back. A lot of people say, well, I don't need whole life insurance or life insurance in my 20s. Well, what you need to do is start saving money and start building your financial foundation. So in your 20s, from like 20 to 30, 35, use whole life to build your foundation. And you can start using it for investing in whatever you want at that point in time. When you get married and start having kids, when late 20s, early mid 30s, maybe early 40s, depending on who you are, now you have life insurance and you did it when you were younger. So your cost of insurance is going to be less. You're going to be much better positioned. And so now your cash value is going to keep growing. So when you go to have your kids get to college, and if you want to do that, which I think would be a waste of money personally, but like if you want to do that, go nuts, go nuts. Otherwise, you got money there to invest in real estate or other cash flow assets or anything of that nature. You could self-finance your cars. You could do all these things. It gives you all this control. That's in your 40s. Now you hit your 50s. Your kids are out of college. You go there. You're expanding. You hit your retirement years. By the way, now you have the living benefits. If you become critically, chronically, or terminally ill, you have access to control the medical directive in your life. I share the story about my father-in-law diagnosed with stage 4 pancreatic cancer November 4th of 2020 at 76 years old, 75 years old. And they gave him 3 months to live because of the ability to accelerate a death benefit and have $250,000 of cash, tax-free, accelerating the death benefit. He's still alive today playing golf 4 days a week, seeing his grandkids all the time, because we're able to do things that insurance companies wouldn't allow us to do, right? And so we control that. You have the living benefits. And in retirement, you have this pool of capital, if you understand anything to do with sequence of returns risk, that's a volatility buffer that you leverage on down years so the rest of your assets can perform better. So there's not another asset in the world that's going to be able to be one asset that will grow with you, solve different problems at different stages of your life. And so when you look at it like that, once again, it's not that you should or shouldn't do that. It's just, I challenge every single person watching this to think about, where are my values? What do I really value in this world? What do I believe the future looks like? And if you look at that and do an assessment, I challenge you to then look at the attributes and the benefits of whole life insurance and not buy it.